All right. Back in the action here once again. Boy, it feels great to be back with you guys here this evening. It's about that time of day again here after all. It's Tuesday evening. It is May the 14th. My name is Joseph, and this, of course, is your nightly newsletter. Now, don't forget, guys, my job is to help new traders and experienced traders find consistent, reliable, dependable, profitable trade setups, and we do that using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different, a very important job tonight. My job tonight is to prep up all the charts, find all the best levels, find all the best setups we're watching for tomorrow. That's Wednesday's trading session. And as always, we're going to grab oil, S&P, Nasdaq, gold, and of course, we can't forget about that mighty euro. I'm going to jump in here tonight first on the oil market, the black gold, the Texas tea, because there are four big clues right now that really are telling me exactly what we need to know, and we're going to use those clues to put together a good plan for tomorrow. That's Wednesday's trading session. Jumping into that black gold, those crude oil futures, we have a range-bound market on our hands right now on oil, right? And with that range-bound market, I want to buy low, I want to sell high, and as you can see right now, we are right down in those lows, right, of that trading range. Now, I'm looking to be a buyer here going back up, right, into that trading range, but I've got two big concerns here right now. One is this big move down from yesterday. That's one big clue. And of course, two is this big move, right, coming lower here into the API report here this afternoon. I'm going to put both of those clues together, right? Two strong moves down, trading range, and I'm looking for ultimately two different types of patterns to be a buyer going back up into that trading range. I'm also going to give you some guidance tonight, right, on how to get short down here if we do end up running lower, and then also too, later in the day tomorrow, we may get a shot here to buy it right back up again if these bears can take control tomorrow. I've got both buy in the short term, buy in the long term. We're going to break down all of the different patterns. I'm looking for to buy in the battle zone, and what a possible breakout looks like here for tomorrow as well. So if you're an oil trader, make sure you stay tuned on that as well. Over on the S&P here, don't forget, right, bull market today on the S&P. I want to buy a bull market, obviously. I've got a great level of support we've found here as well. But there's one big problem, right? There's one big problem, and that is this trend line coming down. If you watched last night's newsletter, you know exactly what I'm talking about. And ultimately, guys, I'm anticipating buyers are going to run into some trouble here tonight on the S&P. I'm looking for a couple different options here right now. I'd love to find a way to sell this market back down into that trading range from yesterday's session. But at the same time, though, I can easily see why buyers may be able to break free of this and how we can get that next leg up to that measured move. So, boy, we could easily be talking about a sell here tonight, back down, as well as a buy. How do we know the difference? I'm going to talk about that tonight on this S&P. Over on the Nasdaq, obviously, very similar to the S&P, but there's one very big difference on this Nasdaq. I'm not going to give it away here right now, but there's one very big difference here. I am not even considering being a seller yet on the Nasdaq. The S&P, I'm looking for a short with the right setup, of course. This Nasdaq is way too bullish for me at this point. I'm looking for a buy setup right now, up to retest or up to get that triple measured move, and maybe all the way back up to retest yesterday's high. I'm not closed-minded to a sell, but I'm going to have to look for a little bit more proof before we start looking for that sell back down. I'm going to break down what's different between the S&P and the Nasdaq. You'll definitely want to stay tuned on that. And of course, we'll talk about the best ways to trade this market as we go into Wednesday's trading session. And then how about that gold? Well, we got the pullback to the midline. Yeah, we got exactly what we're hoping for here today. The problem on the gold is we're a little bit too bearish, right? A little bit too bearish. You'll notice I've expanded out that trading range a little bit. I've added on a little bit more detail on this. I want to be a buyer still, obviously, right? I'm still trying to be a buyer on this, but I've got this trend line coming down, right? I've got a pendulum swing I got to worry about. Got a lot of moving pieces here on this, and there's one big thing I don't want to do inside this range, right? I'm sure most of you guys know what I don't want to do here on gold, but if you're here for the first time today, or you don't know what is staring right at us right now, right, make sure you stay tuned here on gold. I want to be a buyer here on this, right, but there's a couple big problems on this chart. We're going to dive into that here for all you gold bugs in tonight's video, and of course, how can we forget about that mighty euro? Euro, of course, got its overshoot from last night, right? We are overall bullish right now here on the euro, but we got real strong, right? Sharp, what is that called? A two-legged pullback off the high, much like on gold. I do want to be a buyer going back up to retest the high, but I've got a couple big problems here right now. One is momentum. Two is a trend line. I'm going to put both those clues together and show you how I'm looking to buy this thing tomorrow. Also, too, right, can we get short? Is it too early to get short? It's not too early to get short. We just need the right setups on the way down to that big round number. So whether you're a bull or a bear, or maybe you're like me and you could care less what direction, you just want a good setup, you definitely want to stay tuned on that euro. I'll make it worth your while here tonight. So we got the euro, the gold, the Nasdaq, the S&P, the crude oil. We're going to break this party wide open here on this video here in just a few moments. Before we jump into those charts, though, I got to remind you guys, make sure you never miss another great newsletter. And the easiest way to make sure that you're always on the ball is to join our mailing list. Promise never any spam. Trust me, I hate spam just as much as you do. I get millions of emails every week, just like you do. So promise I'm never going to waste your time on these emails. But I'll tell you right now, just before I publish this video on YouTube, I always send out an email to my list to let you guys know that the video is ready. To get on that list, all I need is your name, your email address, hit that subscribe now button, and then don't forget your job is not over. Check your inbox. Also check your spam folders, your junk folders, your promotion folders if you're on Gmail, because I'm going to send you a verification link and I'm going to send you a welcome email. So make sure when you register for the list, check your email, verify your inbox, and make sure you whitelist, right, our emails here from schooloftrade.com. Join the mailing list. That way you never miss another video. And then before we jump in tonight, I need your help, guys. Really quickly here. Have you guys heard about these new micro E-minis yet? What do you think about them, right? Do you love them? Do you hate them? Are you going to trade them? Are you not? Are you aware of all the extra costs that go into trading these micros? You know, there's a cost to that convenience. Are you aware of that cost? Do you want to learn more? Should I add them? Is it a waste of my time? Guys, I want to know whether or not those micro contracts, right, the micro S&P, the micro Nasdaq, I want to know if you guys care enough about them for me to start talking about them here on this newsletter. Would you give me some feedback, right? Love them, hate them, ditch them, add them? Are you aware of the real costs involved of trading them? Let me know. Should I do a video all about them on this YouTube channel? Give me some feedback, guys, in that comment section below, because I rely on you. You rely on me to give you a heads up for the best strategy. I rely on you to keep giving me feedback so I can get better here every evening. And oh, by the way, while you're down there giving me that feedback on those micro contracts, right? Give me a thumbs up on this video if you love the content every evening. And why not subscribe to our YouTube channel? Hit that little bell icon so you get notified every time I publish something new. And then please don't forget, if you have any questions, upper right-hand corner. I know. I'm kind of dating myself right now. I actually talk on the telephone, right? You call the office, the phone rings. I answer it. It's amazing, right? No chat bots, no call centers, no answering robots, right? I know. I'm old school. The bottom line is I would love to speak with all of my clients, right? I'm old school, right? I actually talk to my clients. Call me if you have any questions. That toll-free phone number links right to my desk here in Los Angeles. My wife, Megan, and I are always here to answer all your calls, answer all your questions. I'd much rather have you get the truth and the honest information you need straight from the horse's mouth than to have to go out there and search on Google land, because God knows what's out there these days, right? It's all very incorrect information. So call that toll-free phone number, use that live support tool in the upper right-hand corner, and reach out and get the information that you need. We look forward to speaking with you guys here at the corporate headquarters in Los Angeles. Now, jumping right in. Tomorrow's hump day. Mike, what day is it? It's hump day tomorrow, Wednesday, May the 15th, right? So middle of the week, middle of the month, quite the eventful day here tomorrow. Most important thing for tomorrow, we finally get some news on the schedule tomorrow. We get the retail sales number at 8:30. That will be the big headline number tomorrow. You know it will be, because with all the tension between the U.S. and China trade talks right now, iPhone sales, right, all the electronic gadgets, retail sales will be a big market-moving event tomorrow, so keep your eyes open on that. Later in the morning, get the industrial production number at 9:15, maybe not. I doubt you're going to see much response from that tomorrow. I would be more inclined, right, to think that the 10 o'clock top of the hour is probably going to give us a bigger bang for the buck, right? We call that the 10 o'clock shock. We always expect to see some activity at 10 o'clock. So I wouldn't worry too much about the industrial production number tomorrow at 9:15, but definitely though at 10 o'clock for that 10 o'clock shock. And then speaking at 10 o'clock, right? Speaking of 10 o'clock, don't forget, if you're an oil trader, 10 o'clock on Wednesdays is my typical cutoff. Typically on a Wednesday morning, you want to trade oil either before 10 a.m. or after about 10:40 a.m., right? Give or take there. After 10 o'clock on Wednesdays, market gets really slow on oil, and it's really difficult to trade it. After 10:30, obviously, when that news comes out at 10:30, you know, the hurricane hits, right? All hell breaks loose, and everything goes crazy usually, right? Usually, we like to give it about 10 minutes, and then we'll get back on that horse after about 10 minutes after that news report. So 10 o'clock to 10:40. I know it's a big chunk out of the day, but the good part is that we're going to be ready for all these different markets tomorrow. So while the oil is kind of spinning its wheels around that weekly inventory report, we'll be finding new opportunities on all of our other favorite markets. Not much else to report at the end of the day tomorrow, so it is pretty much going to be that weekly petroleum status report. The industrial production, I don't think it's going to be much of a big deal tomorrow. Retail sales, though, definitely going to be on our radar here. So the rule of thumb tomorrow is get to the trade room early. We open up our trade room every morning at 8 o'clock Eastern time. As always, I hope I'll see you there tomorrow with me. Jumping into our charts here tonight. Let's jump in. We got crude, S&P, Nasdaq, gold, and euro. I'm going to start off here with the oil market. Oil is an overall bullish market into what I think to be seen as a spike and channel. Now, what does a spike and channel tell me to do? Spike and channel tells me to look at the base of that channel, right? That's the buy zone when it comes to a spike and channel, right? So bull market into a spike and channel. That's one big clue. Okay, what else is a big clue here right now? I can also take that high, draw a trend line. I can bring it down to that low, and whoa, that's a beautiful looking little hidden level of support right there, right? You wouldn't have thought that level was important. This might be one big hidden channel, right? This might be one big channel here. And so obviously, right, we know we're bullish. I want to be a buyer. I want to buy off the low of that channel, right? But there's one more thing too, this trading range. What does that range tell me? Yeah, it's the same range. Yeah, same range from last week, right? It feels like this is the range, the never-ending range, right? This range, of course, right? We're back inside that range. What do we know about a range market? What do we know about a range? We want to buy low. Yeah, we want to sell high, and we want to what? We want to stay away from that middle, right? Stay away from that middle. We spent a lot of time today just kind of sitting sloppy, sluggish right inside that middle until just recently, right? Here comes your next clue, right? Your next clue, just recently we see this breakdown. What is that? That's a strong move in one direction. Anytime we see a strong move in one direction, what do we get? Usually we get a second leg. Right? Usually we get a second leg. Okay, so let's recap here right now. Let's recap. One is a bull move, right? We know we're bullish into a spike in channel. Spike in channel says buy the pullback, right, down to the battle zone or in the buy zone, right? What else do we know? I can also use that hidden channel, right? I want to buy off the low of that channel. What else do we know? Trading range. Stay out of that middle, buy low. Okay, that works great, right? Buy low below the low of that range. What else do we know? Strong move. What does that tell us? Strong move says expect a second leg. So now the story tells itself, right? Story tells itself. I want to be a buyer here, but I don't want to buy into that, right? I don't want to buy into that big kahuna. So what I'm expecting now is a second attempt before I can start buying now. So here are two different types of patterns that I'm looking for here, right, to be a buyer. If I zoom in on this chart a little bit, let's get these measured moves cleaned off here a little bit here for us. If I zoom in a bit close to the chart now to give us a little more intimate, right, knowledge here about this. Okay, there's my strong move down. This is the battle zone, right? This is the buy zone off of that spike in channel, right? Anytime we see a spike into a channel, we know this area right there is where I want to buy. The hard part is that strong move down. Here are two options I'm looking for here right now to be a buyer on the oil market here for tomorrow. One option is I want to let him go up, let him try a second time. Then I start looking for moving average comes over. I wait for a small seller failure and I'm buying off the moving average. Okay, so think about it this way. Strong move down. I expect to see a second leg. Once I see that second leg, now I know the sellers got what they want. They're happy. They're pacified. Now that moving average will likely come over. And imagine now those sellers trying to sell another pullback. Okay, that's not guaranteed, obviously. That's not in the books. So that sell, right, those sellers coming off that moving average, once I see a little glimpse of those bears starting to sell again, now I know exactly where their stops are. And I'm ultimately looking for a combination of a failure into a pullback from there, right? A failure into a pullback. Let's do it again a little bit further over here now, right? Strong move down, second leg. Moving average comes over. Let those bears now try to sell off the moving average. I know where their stops are now. I can buy right into those stops. Failure pattern. Then get that moving average coming over, right? Moving average, buy the pullback. The key is we're buying below the range, right? We're buying below the range. It's a failure pattern into a pullback pattern, a seller failure, right, into a bull pullback. Key is buying outside that range, right? You buy inside the range, it's a lot more difficult. Okay, now that's going to be the one that we'll probably get tomorrow. How about the more aggressive entry? How about a nested or a crown reversal here, right? What do we know? We know that strong move down means we're going to probably see a second leg. We've got to respect that momentum. So now what we want to see is I'm expecting the sellers to try once, try twice to get that job done. Okay, to get that job done, right? I'm expecting those bears with that strong move, they're going to try to get that next leg. I'm going to give them 2 attempts to get it done. I'll let them try once, I'll let them try twice, and then watch how I draw this, guys. I'm going to look for that second try, at the very least a double bottom. The best, though, it's going to be a trap low there. We call these crown reversals, right? Crown reversals. Now, why would I want to see at least a double bottom or a trap on that? Because I'm worried about trading the middle of that range. And anytime I'm worried about the space available, trap, 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 trap. Anytime you've got a range-bound market, you always think traps. Because ranges, you want to stay outside that range, right? So I don't want to buy up here as it's going higher. I want to buy down here. Again, we call these crown reversal patterns. And the bottom line is we know the sellers have momentum. We know they're going to try a couple times to get the job done. I just want to make sure I'm buying as low as I can as I go back in. And don't force it, right? Because it may go 1, 2, and run. And that's fine by me. Then we look at that failure into that pullback and go back up from there. Now, how do we get short on this? because this whole big candle is coming out of the API report every Tuesday, I believe it's every Tuesday, unless there's I think it's Tuesday unless Monday's a holiday, then it's Wednesday. Every Tuesday at 4:30 p.m. Eastern time, we get the API report, right? The American Petroleum Institute. It's usually the more accurate report, believe it or not. The bottom line is, though, is it's after the close on crude, so it's really untradeable for the most part, and it's just before the close at 5 o'clock, right, on the Globex session. So we know it's probably not the easiest time to be trading, but we know that this whole move here, right, that's from that big news report. So they may get that second leg, and we may pound this thing lower. So what's the best way to trade that thing? Well, take a look at the bigger picture. And we have to kind of take a step back and think about, we had that big move down from yesterday. Anytime we see a big move down, right, we expect to see the bears try a couple times before they go back in. And we talked about this last night, right? Expecting to see those sellers coming off the trend line and then buying into their stops. Worked perfectly if you followed last night's nightly newsletter. Now, knowing this strong move down, where is the objective? The sellers, what do? They want to get back down to that area, right? That's their goal. That's their touchdown. That's the finish line. So the bottom line is, the moral of the story is that if we have the kind of finish line down there and this market runs down, right, the last thing I want to do is sell down there, right? That's the last thing I want to do down there. So it's going to be really tricky here to be a seller on this market unless, of course, we go 1, 2, and then fail back down, right? Because that's the best way to trade, right, a range-bound market. To sell this market, I can go up, let the buyers try to buy it again, right? Let them try once, let them try twice, and then once we see those buyers try a second time, then we know where their stop losses are, right? And then we can sell right into those stop losses. We call that a 2-try failure pattern. It's very similar to what we're looking at here, right? As we go back up into that trading range. The hard part's going to be, how do we get into this thing short? Okay, so we get a strong move down. We get that second leg lower. What's the trick going to be now? The trick is going to be to mark up that low, right? Strong move lower here. I should be more specific. Strong move, right? Strong second leg there, right? I'm not talking about just a 1, 2, and then back up, right? I'm talking about a 1 and then 2, right? Big move down. The problem is I don't want to sell down here, right? I don't want to sell down here. What I do want to do, though, is use that trend line, right, as resistance, use that level as resistance, draw a channel off that, hidden channel here, and there's my sweet spot. Oh, Bob Ross, I'd be so proud of my skills here, right? Painting it in there, and of course, that's where you're going to want to sell it. Now, be very much aware of this, guys. You've got to get that sell before we retest these lows, right? You've got to get that sell. Okay, write that down if you need to, but you've got to get that sell before you retest that 60, 66 area, the luckiest number on the chart, right? Okay, so you got to get it before you get there, because once we do get there, now you've got to be thinking same basic idea here, right? We saw from last night, you've got to be thinking trend line comes down, and now you're thinking, right? You're thinking seller failure off of that low. And what I'll be looking for here tomorrow, if we do get this thing to finish off this move here, we find ourselves down at these lows, there's a good chance now we finish the session right back up into that trading range. The best way to do that's going to be mark up that high, wait for the 1, wait for the 2, make sure you're above or at least using that trend line. Let those bears try once to sell it. Let them try twice to sell it. And just like in last night's newsletter, how we wanted to make sure that one of them was off that channel, right, off that trend line, same basic idea here. Make sure 1, 2, make sure at least one of them is going to either be off that channel, right, or off or above it, and then we can look for that rally back higher. Very, very important, though, we get that second try, because that market will be very bearish at that time. So we have a lot of different potential scenarios here for tomorrow, right? It's a Wednesday, so get to it early. Remember that 10 o'clock hour is pretty much your cutoff for oil until about 10:40. So get to it early tomorrow. Watch for that completion and failure. Watch for that crown reversal, right? Watch for that 1, 2, 3 up before we get down to that low. And don't forget, I'm just illustrating these right now, but if you want to learn more details of all of these patterns, in fact, if you want to see hundreds of examples of these patterns, what I'll do is I'll put a link in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog, and that will link you up to register for our free trading course. No better way to learn my 3-step trading strategy, get all the behind the scenes about what it feels like to be a member here at School of Trade, and of course, all my favorite entry patterns, all for free, right? It's all part of that free trading class. It's linked up there in the upper right-hand corner. Not to worry, pause the video, right? Pause that video. I'll get registered and then come back. And then we, of course, will keep on moving here tonight. One last thing, don't forget, we are watching rollover here, right? We are watching rollover. As of tomorrow, we'll start getting serious about watching that contract rollover. We had about, 725,000 contracts today. So it's not going to be rollover tomorrow. But tomorrow night, though, we will get serious about looking at rollover for Thursday and Friday. Next up here, over on the S&P 500. S&P, if you recall from last night's newsletter, let's get this bigger picture here real quick, because that's going to be the most important kind of piece of this puzzle, right? We talked about this last night on this newsletter. We got this big channel here. Now, I wouldn't normally, make such a fuss about this big channel, because I just honestly don't believe you need longer term analysis. But in this example, you'll notice there is quite a bit of evidence here right now of what's going on, right? The market is rallying off its lows and then getting smacked back down off that high. Here we are again, back up at the high of this channel. And again, I wouldn't even be mentioning this right now if we hadn't seen this so consistently working so long, because most of the time you just need to pay attention to what's happening right now. Most of the time, you don't need to worry about, right, those bigger picture channels, those bigger picture levels, and you certainly don't need to be using multiple time frames, right, to do it. Everything that we do here at School of Trade can be done on a laptop. Very, very simple. Just trade one time frame, and usually all you need to know is what's happening right now. Speaking of what's happening right now, what is happening right now? Got a nice big bull move up. That big bull move up tells me I want to be a buyer, and I'm going to buy at support. Where can I find a level of support in a bull market? I'll draw a trend line off of those highs, bring it down to that low, and it creates what? It creates what I call a hidden channel, right? Put a midline in the middle there, and you'll see that midline, right, responding nicely. So that is a definite area where I'm expecting to see buyers are going to come in, right, and give this thing a shot. Now, knowing that we have buyers there, let's get off the measured move here, right? We know where that next leg is going to be, just in case you're wondering where that comes from. Now, again, knowing that this is the top of this channel, and knowing that history often repeats itself, right? I have a very hard time being a buyer in this market right now, okay? But it's really not just because of the channel, because you're going to see on the Nasdaq, right? The Nasdaq is top of its channel, right? But it's not a buy yet. It's not a sell right now, right? I want to be, right? I would normally want to be a buyer on this, but because we are at the top of that channel, and then most importantly, the way the market has responded to the moving average, right? Remember, how markets react to the moving average is some of the most important information that we get. And this is one of the biggest reasons why I tell my clients, get rid of all the extra moving averages, right? I know it's tempting. Believe me, when I was a rookie, I had dozens of moving averages, right? The normal suspects, 20, 50, 100, 200, the VWAP, the XWAP, the QWAP, right? All of those lines. If you put too many moving averages on your chart, it becomes difficult to really focus on one of them. It really doesn't matter which moving average you use. I've got my favorites, and by the way, you'll learn all about my favorite moving averages and how we use them inside that free course I mentioned earlier. But one of the biggest reasons why I don't use a lot of indicators is because it's too many voices in your head. You know, every single indicator needs to line up and agree with every trade. If you're trying to use a dozen different moving averages and you're trying to make them all make sense, you're going to very rarely have a situation where everything lines up nicely for you, and you'll miss a lot of good trades. Use one moving average, and as you can see, right, look back here, right, look back here. What happens back here? We're bearish. And then what happens, right? We jump off the moving average. When we jump off the moving average, that's your sign this market has turned. Once you saw it jump off that moving average, now you know we're bullish. Grab that hidden channel, right, and buy that low right there. We talked about this last night, right, on the newsletter. The bottom line, though, is that now we see it jump off the moving average here. Right? Now, I know what you're thinking right now, but wait a second. Don't we need a 1, 2, 3 reversal? You're right, we do. That is exactly what I would want for this to be perfect, right? But here in this situation, though, I think we have that little bit of an edge right now, seeing that history has usually repeated itself here, coming off the high of that channel. Again, that channel is not enough to make me sell, because you're going to see in the Nasdaq, right? It's just not enough, right? I've got too much momentum here to be a buyer. But when I see this thing jump off that moving average like that, that is my clue right now. Momentum is shifting. Now, the hard part is I don't want to sell low here, right? The last thing you want to do is chase after it when it drops like this, right? You're basically selling low is what you're doing. You want to sell high. So what I'm going to do right now is ultimately look for a crown reversal pattern to sell it short. We have it go up. I've got a 1 try for the buyers. I've got a 2 try for the buyers. All I need right now is a trap. And that trap is hopefully going to be enough to get the breakout buyers trying to buy it going higher, and I can then sell right into their stop losses. So here's the reality. Usually when a market is bullish like this, and then we see that 1, 2, 3 and jump over it and jump lower, usually that high right there is where that trap comes in, right? And this is that typical crown reversal pattern we talk about so much on this newsletter, right? That lower high, that slight higher high with nice signal candle for that sell back down, right? What's the giveaway? The giveaway is this move right here. It's that move right there. That move right there combined with a level of resistance up here. Remember, it's not enough to just sell the resistance. We want to make sure we get some sort of evidence that people are actually walking away from the buy side, right? The buyers here. And at the same time, we don't want to chase after it as we go lower, so we wait and sell that trap. It's either that or you're going to wait for it to drop and then get in on the pullback from there. So my desired setup right now is I'd like to sell that resistance. I don't want to sell down here. And I've got a level of resistance here as a reversal line at 43, right? I've also got, as I mentioned earlier, I've got that high. I've got that high. Those are my key swings. That creates the battle zone. And really right now, I'm just hoping I can get a nice move up, a strong signal candle. And when I say strong, closing below the moving average for that sell back down. Now, I'll talk a lot more about crown reversals in that free course. And obviously, we'll go into a lot more detail in our membership classes here at School of Trade. But that's the short-term sell, right? We go up, we get a 1, we get a 2. I'm looking for a trap. I'm looking for a trap to sell this thing back down. Where's my target? Target's back into that range, right? If you got a good, final runner, back down to that 2,800, back down to retest that low. Okay. Now, what if we don't get that trap? What if this thing just goes up, right, and dumps going lower? Well, then unfortunately, I wasn't able to get in. So what I'll do is I'll mark up those lows, mark up that high, mark up that, right? And we'll just sell up inside that sweet spot. We're going to be going back into a range now, right? Going back into that range now. So we don't want to chase it lower, right? If this thing collapses back down, what you're going to want to do is you're going to want to get back up Let those buyers try, right? Let them try to buy the pullback going higher and sell into their failure. So a failure pattern. So a couple different scenarios, right? 1, 2, trap high and down. That's the short term. Or maybe we don't get that trap. Maybe it pulls back and goes, right? Draw that hidden channel up overhead, and we're looking to sell the high of that channel. Or maybe it just dumps and drops lower. If that's the case, don't chase after it, right? Whatever you do, don't chase after it. Get up, let the buyers try to buy the pullback going higher, right? And we'll sell into their failure, kind of the opposite of what we're trying to do, right, on that oil. So a couple different scenarios here to be a seller here tonight on the S&P, okay? Makes sense? Now, how do we buy this market? I will gladly be a buyer if this thing jumps back up, right? It's going to jump. But here's the problem. When it jumps back up, where am I? I'm right back at resistance. Remind me, guys, what's the best entry setup to avoid buying high or buying into resistance? A trap pattern, absolutely. So as we go higher, look for a way to get in on a trap. Trap patterns are always my go-to pattern. We might be able to, as you can see me drawing this, use that trend line and again, just find some way to buy on a trap. Again, what's going to happen is it'll jump up. If it jumps up, I automatically know I'm not going to sell this market, right? Because I already know I'm looking for that move up and a strong follow through, right? So if it jumps up into that range, I already know now, nope, not for me. We now know we're bullish still, and we're probably going to be hunting for that measured move. So when you do that, though, before we get back to retest the high there, 1, 2, trap low, right, and go. What if we don't get that, right? What if it just jumps? What are some options? 2, try breakout. 1, 2, buy it. Okay, 1, 2, buy it. Again, strong move up through the high. Bears try once. Bears try twice. We're buying into their stops. Okay, you don't want to buy high. Don't buy into the measured move. If we do get the measured move, then what? Right? If it just runs up, hits the measured move, then what? Remember, most measured moves are going to pull back and retest. So if we do see that measured move blast higher, look for that pull back, that seller failure. Let those bears try to sell off the moving average, classic, and then buy into their failure. That's called a failure setup, right? It's a seller failure in a bull market, right? Use those levels of support. Use those levels of support. And again, don't chase it. As it goes higher, don't chase it, because if you miss it on the way up to the measured move, just stay patient, right? Chances are you'll get it later on in the session. But the worst thing you want to do is you don't want to buy high here just to get stopped out, only to see it go right back up in your favor. Now, what if this thing dumps back into the range? Then what do we do? We look to buy it right back up into the range, right? It's a range bound overall, right? It's a bear market, but in the short term today, bullish with a range. If we do end up back down, how do we buy it here? It'll be very, very strong for the bears here. So I want to see the bears try once, sell the pullback, twice, and then I can buy back up, right? That's the trick, right? If we collapse back down, I cannot just buy it just because I'm at a level of support, right? Just like I can't just sell this just because it's a level of resistance. I need to get a little bit more information because momentum is not on my side. So if we do end up down at those lows, we know bears will probably try once. They'll probably try twice before we get that run back up. Let them try once, let them try twice, and then we'll get that party rolling back up into that trading range tomorrow. Over on the Nasdaq here. Over on the Nasdaq. Nasdaq now, at first glance, the Nasdaq looks just like the S&P. But now that you know what the S&P is all about, do you see the difference here right now? Momentum, right? What was the biggest clue on the S&P? The biggest clue on the S&P was the jump away from that moving average. I just don't see it. I don't see this NASDAQ giving me that same effort. I don't see this thing pulling back far enough. I don't see the jump off of this. I just don't see it. In my eyes, this looks more bullish than bearish. Now, I might be wrong, right? I might be wrong, but the best part is I'm not trying to predict. We know on the NASDAQ, we know, again, same thing as the S&P, right? Big, strong bull run up. Now, On the Nasdaq, I'm using a slightly different channel here. I'm drawing off these lows. I mentioned this last night on the newsletter, and then up around these highs, right? So that high there is what they're ultimately running into. The reason why is because there really isn't a lot of clarity on one big channel coming down like there was in the S&P, right? The S&P had that pretty obvious big channel, right, coming down. Nasdaq, as you can see, is going to be a little more difficult. If you go back in time and look at it, you'll see what I mean. The bottom line is I've got this channel. You can easily see they're holding this. Again, the channel itself is not enough to sell it. I need to see that sharp move off the moving average. I need to see momentum start to change hands. Okay, at this rate right now, these buyers are probably going to get this run up to, at the very least, up to retest that high. Next step, of course, is that next measured move. So we know we're bullish, but we know we're up at a level of resistance right now. So what's the plan? How do we buy a market that is right into resistance? What's the best way to avoid buying high? Trap patterns. Absolutely, right? That's the go-to setup whenever we're worried about buying high. There really is 3 different setups I'm watching for right now. One of them is a two-legged pullback. Up and over and in. This would really be this would be a nice one. This would be nice if we can get this. What you'll do is you'll draw a trend line down overhead, right? And then of course up and over and go. That's the one I'd like to get the most because that gives me the most profit potential. And remember guys, if you want to be consistently profitable, get in the habit of risking small to earn large. If I buy low like this, I can risk small, right, to earn large. If I try buying here now, I can't do that, right? I can't do that. Okay, another pattern I'm waiting for, right? If we do get the 1, the 2 now I know where stops are, and that, of course, now is a simple failure pattern, right? We go lower, the bears try to sell off the moving average, right? And we now know, right? We now know we can buy into those stops. This one's going to be tricky because obviously we're going to be a little bit higher than I'd like it to be. It really has a lot to do with when this thing sets up, right? If it goes like this, up and then back, obviously I'm not going to buy that failure, right? But if it rolls over like this now, right, and immediately goes lower, right, I can buy that failure. That looks much better. So a lot of that has to do with how this thing sets up, right, at the opening bell in Asia. And then, of course, what if it just jumps, right? If it just jumps, there's a couple different things you're thinking. One, of course, is that trap. Right? One is that trap. So if we end up running higher here, right, right, trap, get that trap low. As we mentioned earlier, you want to buy that trap, right? You don't want to buy into that overhead resistance. And as long as you can get this before they reach that high, that's the trick, really, right? You want to get it before they reach the high. So they go up, right, trap, and then, of course, right, buying up from there. Now, again, I'm illustrating this on this chart. I've got hundreds of examples of trap setups right near those highs inside the free course, right? It's linked up below the video tonight. It's linked up in the upper right-hand corner, right? So 3 basic buy patterns here on the Nasdaq, up and over. That's the desirable one. Or it's 1, 2, failure and go. Or if we jump up, 1, trap, right, and go from there. Or strong move up, real strong, right? Real strong move higher. 1 try for the bears, 2 try for the bears, buying into their stops. Okay, very, very important we get that higher high. Very important we go through the measured move, go through resistance, show me you mean it, and then we're waiting for that second attempt to buy into those stops. Now, how do we sell this market? All they have to do is run this thing lower, and this thing turns very bearish now. The problem is I don't want to trade the middle, right? Back inside that range. So what do? Mark up that low, mark up that high, mark up that high. Come on, Bob. Right, here we go. And of course, we're looking for that sell right off of that high there. Okay, again, strong move off the moving average gives the bears control. We then don't chase after it, right? You're not a rookie who chases after trades anymore, right? You watch this newsletter, you are not a rookie any longer. You're an experienced professional now, and time to go pro and start focused on selling, right, at levels of resistance. Okay, professionals don't sell short at support. They sell short at resistance, right? So start thinking like a professional and sell up at resistance. Okay, now again, obviously if we go higher here, we know where our big targets are overhead. Okay, we're looking good there. So now we know the buy side. Now with the sell side, we also know, right, if we do go back down to that low, it's a 1, it's a 2, just like the S&P 500, right, to go back up into that trading range. Nasdaq looks great here for a long. Will the S&P do the same thing? I couldn't tell you. I couldn't tell you. Only time will tell right now. How about some gold? Boy, lot of good stuff we talked about last night on this gold. Most important thing right now is it's a bull market into a trading range. You'll notice today we got a little bit more information today that allowed me to confirm the larger range. Last night it was a smaller range, and we went 1, 2, 3, right? And we knew this area was probably going to be where the best, right, where the best opportunities would be. Today we got a little more information, and that's the way trading works. You know, being a trader is a lot like, solving a puzzle, and every single candlestick is another puzzle piece, right? Think of it that way. So we got more puzzle pieces today, and now we can know more about where that range is. I know that trading range tells me to buy low, to sell high, and what? Avoid the middle, right? Mama says, don't fiddle with your middle, JJ. Stay out of the middle. She never told that to me, actually. That was just a saying. It's a saying, but it would have been great if she did. The bottom line, though, is that I want to stay away from this middle, right? I want to stay with the middle. Don't fiddle, right? Don't fiddle with that middle. Okay, so I know I want to buy low. I know when to sell high. I'm in a horrible spot right to trade. Okay, so trading range tells me buy low, sell high, avoid the middle. What else does the range tell me? It also tells me that the amount above the range is oftentimes equal to the amount below the range. Okay, that gives me this 92.3 area for the pendulum swing. Now, I will be the first to tell you that pendulum swings should not be taken absolutely tick for tick literal, right? Just should be in the area. Get me in this area down here, right? And that will be the sweet spot for the pendulum swing. Okay, so I know I don't want to trade the middle. I got to get out of here somehow. I also know if we can get lower, I've got more buy potential as we go lower. Okay, those are the most important things about this range right now. Then on top of that, trend line. What do we call this? One leg, two leg. We call this what? We call it a two-legged pullback, right? What do we do with two-legged pullbacks? In a bull market, we try to go above it and buy it. That by far is a very desirable setup right now for the gold bugs out there. If you want to be a buyer, you want to stay out of the middle. And what better way to do it? Get that trend line coming down, right? Go up into the middle, kick back, buy off that low. Two-legged pullback pattern, beautiful setup. Okay, on top of that, what I really love about this is the potential now for this to be a crown reversal, right? Or a nested two-try failure. Strong move down, right? You got that trend line coming over, so you know it's a little bit dangerous there to be buying into that trend line right away. But because that market is so bearish too, right? I mean, look at it this way. Only a very short amount of time today was spent bullish. I mean, most people look at this and go, no, this is a bear market all day. It really was. So we know we have a lot of sellers here. They've tried once. They're going to probably try twice. And really, it all depends on where this thing pulls back. Because this looks great. This looks great for what we call a nested two-try or a crown reversal. It's not much of a reversal, so I wouldn't call it a crown reversal, but it's a nested two-try failure. This one's a little bit more complicated because you've got that trend line coming in, right? But think of it this way. Anytime I have a trading range and we go up and then dump back down, right? That momentum is so strong at that point, it's difficult to pick a bottom. You try to buy it, stops you out. Buy it, stops you out. Then it goes back up. It's tricky to pick a bottom when the market is so bearish. But because it's a range and I don't want to buy below that range, what I do is I let the bears try once. I let them try twice. Again, look how I draw this. Higher highs. That's the trick. And here's the easy way to remember it. Sellers want to sell high. Buyers want to buy low. We go up. 1, 2, right? Lower low. Buyers want to buy low. Sellers want to sell high. That's the way I remember it, right? So when I'm thinking about, okay, what do I need? Do I need a higher high or a lower low, right? What is it? Buyers want to buy low. Sellers want to sell high. That's the trick, right, to remembering which setup you want to look for. Okay, I always think, right, as we go lower here, the bears want to try it once. They're not going to try at the same price. They're going to try at a higher price, right, because bears want to sell high, then back up into that range. What's making this a little more difficult is we have that trend line coming down, and that trend line obviously is now what I want to use. And again, we've got that trading range right here, and I don't want to be in the middle. Okay, so what might happen is we may see a big signal candle coming off it, and it may put you right in the middle. You don't want to take that trade, right? If it puts you right in the middle, you want to wait for it to get back down and do it again, right? Get a better entry to a lower price. Okay, that is the tough part about where we are right now on gold. Okay, gold can be really tricky in the middle of those ranges. Okay, so we know right now I want to be a buyer. Now, what if we get that second leg and it crushes it right back down to that pendulum swing, right? What if this thing just rolls back lower? Then what do we do? At that point, this trend line probably won't mean very much anymore. But again, we're so bearish now. It's the 1, it's the 2. Again, sellers want to sell high. Let them try once, let them try twice. Again, stay out of the middle and buy back in. Now, all this talk about buy, how do we sell this thing? How do we sell it? 2 ways to do it. Strong move up. That will what? That'll be a lot of momentum. How do we sell it? We go up. The buyers try once. The buyers try twice. Sell it back down, right? We go up, right? Imagine now we go bam, big move up. But we don't push through the highs, right? We top at the highs. Now what do? Remember, we don't just sell at resistance in a bull market. Okay, we don't just sell because it's resistance. Momentum is too strong. It's the most important factor when it comes to day trading. What direction is momentum? Because momentum tells me what type of pattern I want to see. Let them try once, let them try twice. Buyers want to buy low, and we drop that sucker back in. What's happening is you got the short-term buyers, you get the longer-term buyers. Once they're all roped in, then we're free to go. But you got to let them both try, right? Because a lot of times what will happen is it'll go up. The short-term buyers, the aggressive buyers, the buyers who are buying the 23.6, the 3.82 pullback, the aggressive buyers, they try. But then all the gray hairs, right? All the experienced traders, all the old folks in the market, right? They're the wheelchair. I'm kidding with you, obviously, right? But you know what I mean. The more experienced traders, they know better than taking shallow pullbacks because they don't risk small or large, right? And they come in and they grab it right there, right? They say, okay, once those rookies, right? Those whippersnappers get stopped out, I'll be buying right into those stops. What's the easiest way to get a good fill? Yeah, just buy into somebody else's stops. While the original buyers are getting stopped out, what do? They sell out. Well, guess what? I'm buying. I'll take those sells, right? I'll take those shares. I'll take those contracts. I'll take those lots, whatever the case may be, right? So you got to be careful with that. So we go up 1, 2, and then back down in. What's a breakout look like? Could this thing turn bearish? Oh, it definitely could, right? I want to see it go 1, 2, 3. Right? 1, strong move down. 2, pull back to the moving average. Right? 3, blast off. Then mark up that low, up to that high, find that new channel, and we're selling that sweet spot right there. Where's my target? The low of that, right? The low of that channel. This, of course, going back to last night's newsletter, right? The low of that major channel, right? So if we do end up collapsing here, watch that channel low, and then guess what, guys? We can go 1, 2, and then right back up from there, right? So we can continue to use those 2 try failure patterns. But again, because we're bearish at that point, you got to let those bears right? Let them try twice. So great example there. Same thing would happen to the upside, right? If we go up 1, 2, back down, but if we go 1, 2, 3, bingo, perfect. Mark up that high, mark up that high, mark up the low of that channel. Again, notice how I draw it. I draw it off this low, right? Ignore that low, grab off that low. Then you know where your sweet spot is there, and then we can buy that pullback there. And again, that pullback I'm talking about is probably going to be, if you were to kind of zoom in on that area here, that pullback I'm talking about is probably going to be a failure pattern, right, into a pullback setup as we talked about earlier, right? That failure into pullback as we go. I'm going to break down all of these patterns, obviously, inside that free course, failure patterns, pullback patterns, and everything in between. Stay out of that middle here on gold, right? Stay out of that middle, buy those lows, sell those highs, use the right pattern. Now, I really set this up for us here tonight on the euro. Hopefully now you can see on this euro, you can kind of see all the plan now. First of all, overall momentum, right? Overall momentum is bullish, okay? That bullishness went into a range, okay? What do we do with the range? We buy low, we sell high, and we avoid the middle. I warned you guys about that last night, right? Look what happened right in the middle. Very, very difficult to get a good result in the middle. A lot of times what happens is good patterns go to the middle to die, right? They do. It's a very difficult spot to trade. So we know where we are right now. We're right down around those lows. I want to be a buyer going higher here. In fact, mark up those highs. Slightly adjusted from last night's newsletter because we got the undershoot overshoot. Once you get the undershoot overshoot, now, what else do we have here? Levels of support down here. Now, this might be a little bit lower here like that, right? It might, this is always a little bit tricky to find the exact bottom there when you get a bunch of options. But, think of it like that. This is a great area of support down here. I want to be a buyer going back higher. My only problem is basically it's two problems. One problem is I've got overhead resistance. Second problem, as you can imagine, is strong move, right? That's a pretty strong momentum right now. That is a relatively strong move. And anytime we see a strong move in one direction, we're probably going to see a second leg, or at least a very strong attempt to get a second leg. So ultimately, before I start being a buyer on this, I've got to make sure these bears fail, or I'm going to try to use that trend line up and over and get that thing back up. That's the basic idea here now, right, on this euro. So we know we want to be a buyer down here. I know I want to buy, but I also know I have to respect these sellers. Okay, we talked about this on gold. What's the best way for me to buy when momentum is bearish? Remember, it's not just enough to buy at support. Not if momentum looks like this. Not with those red candles, I won't. What's the best way to do it? That nested, right? Or that crown reversal. We let them try once, we let them try twice, and once we get those bears trying once, trying twice, again, get above that trend line, right? Bingo. Now we're talking. Okay? Or another option here would be one try, two try, back over. The key to this one, though, is going to be make sure they've got at least a retest of that low. So as we go lower here, imagine how they pop up. Okay, know where your low is, right? Know where that low is. Make sure you get the retest and then up from there. That will probably be a scenario where you're going to want to see, for example, you're going to probably want to go into obviously a faster time frame we'll use tomorrow. But if we go up, right, and then over, right, hit that trend line now, moving average comes over. I'll look for a short-term, right? I'll look for a short-term failure and try to get that failure into a pullback, and then up we go from there, right? It'll be a finishing move of that two try, right? Let those sellers finish what they started, right? But at the same time, though, because it's so bearish, I'll still want to get that little bit more confirmation. It's that let them sell off the moving average, buy into their stops, right? So it's that failure pattern, right? And of course, it's that pullback pattern from there. Great opportunity there because risk small, earn large, great setup as we go. All right, guys. So again, it's the 1, it's the 2, back up, crown reversal, or it's the up and over, failure into pullback as we go. What if it just takes off to the middle? If it takes off to the middle, stay away from that middle. What do? Get below it. Let those bears try once. Let the bears try twice. We call this a 2-try breakout pattern or 2-try failure pattern, I'm sorry. And we're buying right into those stops. Right? Let those bears try once. Let them try twice. Stay out of that middle. Right? As we go higher here, big, strong move up. Right? What's the best pattern? Momentum is too strong just to sell it. I don't care I'm at a level of resistance. 1 try, 2 try, back down into that trading range. What's a breakout look like? Breakout, 1, 2, 3, strong move down. Easy for the bears at this point. Mark up that low, mark up that high. And we got to get short on that before you get back to that big round number. I would assume that 12,000 will be a big milestone. You want to get that sell before you get back to that big round number. All right, guys. Great stuff here. Great stuff here tonight on that euro. Got a good plan for the euro. Great plan for the gold, Nasdaq, and the S&P. Grab your popcorn, kiddos, because the S&P and the Nasdaq could have a very, very good day tomorrow in both directions. And of course, that oil, right? Watch out for that oil report tomorrow morning. Don't forget that weekly report every Wednesday at 10 o'clock, right, is that cutoff, right? 10 o'clock to 10:40, so get there early. Speaking of getting there early, am I going to see you tomorrow morning? Better be on time, 8 o'clock Eastern time. We open up our trade room, and as always, don't forget, I want to see you there with me tomorrow. The best way to get started is to grab that advanced membership package. It's right below the video tonight on the blog or on the website here at schooloftrade.com. If you're not ready for membership yet and you still want access to our trade room, right, our course materials, I get that free trial right to the left of my ugly mug. Grab that free trial. You'll get access to a free pass. Come on, join me as a guest in our trade room. The free trading course to learn all about the patterns we love and hundreds of examples of real setups we find every day in these charts. And of course, a peel back the curtain. You can see what it feels like to be a client here at School of Trade. So grab the free trial, right? Or take the plunge, grab that advanced membership, and come out and see us tomorrow morning as a brand new client, 8 o'clock Eastern time. If we don't see you guys there tomorrow morning, same time, same place tomorrow night. We'll do it again tomorrow night. And as always, guys, follow those rules. Stay out of that middle, right? Don't fiddle with that middle. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.